Hi everyone, welcome back to BeRich. It's me, Vinod, recording remotely from Paris. Recording it. Anyway, what do I want to talk about today? I want to talk about what's happening in tech space as far as debt is concerned. And this kind of gives you an idea on why the Meta stock was beaten when I was talking last video when I said they had given great results, but just on AI spend its alone, the market is looking a little scared for all the capex they're talking about in AI space. And why is that? Because since recently, what's been happening is all these US tech giants have been issuing bonds to raise the capital required for these capexes. You've been assuming these guys are cash rich, so they're taking their own capital reserves and they're spending it on AI. Some of it was initially true, but as these numbers have been building up and picking up, and market enthusiasm is there, market players such as you and me, retail investors, all participants in the market, especially in the US market, are very keen on AI, on participating in AI space. The tech companies have said, okay, since the public has such enthusiasm for AI, let's take advantage of it. And they've been issuing bonds. And these bonds have now ballooned up to $200 billion this year. These bonds are meant for funding AI infrastructure, just data centers, chips, and power. Anytime we issue a bond, we have to clearly say, mandate is that we have to clearly say how much we're willing to pay for this bond, which is the interest coupon rate. Then, of course, we have to clearly say what is this bond going to be used for, which has to be the funds which comes for these bonds have to be allocated and spent on this. And this is how bonds work. That's why even in India, when we talk about bonds, one company will issue two bonds. One bond will be doing very well. The other one is not doing so great because what the bond is being spent on may be risky in one situation and not so risky in another situation. So we need to understand this nuance of it to understand why. So these bonds they've raised are the funds which are coming through these bonds are going to be spent in AI infrastructure, which is data centers, chips, and power. And if you realize one of the major issues with AI is not chips. Chips is one, of course, but there are two other main aspects of AI. One is these data centers. They require fresh water and they also require power. And right now in the infrastructure in the US, power infrastructure is already crumbling. This was way before AI came into light in the US. Since way back, American government successively have been promising, to improve American infrastructure, but they have not done. And this is showing up very clearly now. And the reason why then this has been a problem is since World War II, when America spent a lot of money on public infrastructure, successive governments have been laxed about it. So that's why we see there's always been lots of information, videos, and articles written about the crumbling infrastructure in the United States for the last 15, 20 odd years. And it's been getting worse. So these companies which require data centers, and these data centers requiring fresh water and power, have no other option but to invest their own capital into this. And this is where the problem lies. One is land acquisition. Second is resource acquisition, such as water, reservoirs. And third is power, This is why you hear news about, Microsoft, 3 Mile Island, Google building its own small nuclear power companies. And we've been even talking about this channel, where AI companies and small nuclear power companies whose stock prices have gone through the roof for the simple idea of prospects. So this is how this bond money which is being raised in bond is being spent. Meta has already raised 30 billion in bonds. Oracle has raised 18. These are amongst the biggest bond issuers. So imagine Meta has raised $30 billion in bonds. And the difference between a bond and an equity is, you must understand, in equity there is no promissory. If you believe in the company, you believe in the founder, you believe in the business model. So when you buy equity, you are investing for capital appreciation. So you buy, let's say, a $10 stock and you're hoping that it'll go to $20, $30. And that is the prospect. And the reason you're investing is for that capital appreciation. But bond is a different game altogether. Here you're lending money to the company to promise of an interest rate being paid. And at the end of the term of the bond, you will be returned the capital. And bonds are always very strict, in the sense that you cannot default on a bond. So if the company starts defaulting, then the company is pretty much gone. And that means when the company reaches liquidation state, bond issuers are the first ones who get paid. Equity don't get anything, because equity value goes to zero when a company goes bankrupt, and the bond issuers are paid. So bond is a heavy burden a company takes on board. So this is why you have to understand, when Meta has issued $30 billion worth of bonds to raise capital for AI infrastructure, investors are slowly starting to worry about this. Because if AI is a bubble, if Meta is not able to monetize this, like I said in the previous video, right? At least in the case of Google, in the case of Microsoft, in the case of Amazon, there are other huge revenue streams they already have. Cloud, cloud computing, product services, other auxiliary services, which are giving them steady sources of income. So there, the exposure of bond, they're not so worried about. But in the case of Meta, he's already been in trouble for some time, Zuckerberg, with Facebook, ad revenues dwindling, Instagram not doing so great because of TikTok coming and hammering it, and WhatsApp is the only thing which he's holding on to right now. So his whole metaverse, that all vanished. The NFTs vanished. So now he's banking on this, and he spent already a lot in terms of acquiring talent, and there's a lot of rumors of infighting going on there itself. Piled on top of this, he's borrowed now $30 billion in terms of bonds. This now has got investors worried. So that is why you have seen the Meta stock correcting, more than Google and Amazon and Microsoft. When they came out with news, all of them came out with news saying they've done better than estimates, they've beaten estimates, they've done very well. But he's been beaten for the simple reason of bond exposure. And this is true in the case of Oracle too. Oracle has issued $18 billion, but Oracle is slightly different. Goldman Sachs, is estimating that AI-linked bond now makes up about a quarter of the total US corporate bond issuance. So 25% of all corporate bond issuance in the United States now is tied to AI-linked. So AI-linked, there's not only chips, not only data centers, like I said, power, water, name it, anything related to AI is now doing this. And now fund managers have started warning that funneling vast debt into a rapidly depreciating AI asset with the uncertainty of payoff will become a systematic credit risk if and when the AI boom cools. This if and when the AI boom cools is not a question mark. It is a certainty. Any new technology cycle goes through this. Initially it's at the zero, then suddenly it has an exponential growth, and then it cools off. So that cool off period will come. It's not a question of if, it's a question of when. And when that comes, these debts these companies have taken on with no certainty of payoff and no revenue stream from this is starting to worry fund managers. Despite all these warnings, investor demands for these high-grade tech debt remains very strong, and the borrowing cost for now is low. Borrowing cost is the interest they have to pay to borrow this money, and those interest rates are quite low. You see these interest rates starting to tick up. That means investors feel these bonds are turning slowly toxic. There's too much of it. The risk is growing. So this is something, as an investor in AI space, you should definitely keep an eye on. Keep an eye on how the trend for bonds are going, interest rates for these companies are going. That will give you a lot more insight on what is happening in terms of bond issuance and the general mood of the market towards AI. And as an outsider trying to figure out what is happening inside, this will give you a lot more clarity, because if companies trying to borrow money saying AI and they're finding it harder to borrow the money, that means there's something going on. So this is what I wanted to get out to you guys today. Tomorrow I'll talk further about debt traps in the Magnificent Seven and also the bubble dangers. Then we'll also touch upon China and what's happening in China. Anyway, thanks for being with me today on BeRich, and I will see you again tomorrow with another one. Bye.